The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Tommy O'Brien.
Okay, folks, this is Billy Ray Valentine, also known as Larry Pesavento, setting in for the O'Brien clan. They are in New York City at the Money Show, and we're going to start out here with the gold market. I finished Tom's show with the gold market, but I've already had two questions about what I had talked about. It was some of the work that Larry Edelson had done with neural networks. I'll go into that just a little bit, but we're looking at the gold chart on a weekly basis. And, if you're bullish gold, folks, be really careful in here, because you can see that the high that we made last week was an exact 61% retracement of the high from 2014. Both of those rallies, the one in 2014 and the one that we've had recently, were 8 weeks long, and they both were nearly exactly $212 an ounce. Now, that can't be by chance. And if you look at the highs between 2014, 2015, and 2016, those highs are almost symmetrical. So you've got a lot of things happening. Plus, you have a 1.618 expansion of the 6-month move from August down into February. That was also measured up to 1,262. If you remember, we were watching that 1255 level to 1260 very, very closely, and this is what's happening. Now, on the recap that Tom talked about, well, I did the talking, but it was the work done by Larry Edelson that we had looked at before on neural networks. I'll go into that just a little bit, but I wanted to just to show you the forecast that is going on in the market right now for gold. And believe me, we started following this, folks, way back in November. And as you can see, the correlation here has been tremendous. We saw the bullishness that we were looking at, down around the 1070 level. And then, of course, we got all the way up to 1130, and Mr. Frickles here said this is a good time to take the profits in the gold, and I was able to miss the last $130 of it, but that's neither here nor there. That happens all the time. But this correlation is very high. Now, those of you that are not familiar with neural networks, I've been doing work with these for well over 20 years. Back in the old days in California, when they were just experimental, we had to have experimental computers, and they were called, what was it called, a zip machine or something like that just processed numbers, and it was really way over my head. All I did was finance it. I had some smarter people than me worked on it. But basically, neural networks, there's several different kinds. There are genetic algorithms and fuzzy logic, and there's several other categories. Those are the two that I had some experience with. But genetic algorithms are really good, and they do propagation studies to go back. And what they do is they try to find patterns that have happened in the past. The Tomahawk missile that we use in the Navy, that you see it coming out of the submarines, and nuclear missiles. That missile, once it leaves the water, it doesn't know where the target is. It has to get up about a mile high before that target actually is programmed into the warhead of the missile, and then it starts its way towards the target. And it's guided by artificial intelligence, because as it proceeds over land or over the sea, it identifies the geography and the topography of what they're looking at, and then as it gets closer to the target, it hones in on what it's supposed to be looking at, whether it's a chemical plant or a hospital. And that's how those warheads work, and they're extremely accurate. If you ever remember the 1991 one-day war, the Desert Storm, when when Norman Schwarzkopf took the city of Baghdad. The Navy SEALs planted the honing devices the night before, and you saw the pinpoint bombing that occurred, and that was mainly because of the mechanisms that were in those warheads. So that's what they're trying to do, with the stock markets, is looking at some of these things. And sometimes it works perfectly, sometimes it doesn't work at all, but it's all probability based anyway. That's the main thing. If you listen to my show in the beginning, you remember that I started the show about this little placard that we talked about, is that you don't trust words, you don't trust actions, but don't doubt the patterns, because the patterns are the sum total of all the buyers and sellers that are out there. You can promise yourself that they're going to lie to you, they're going to try to cheat you, they're going to give you as much information that they possibly can, and I'm talking about the market, not just one person. But the one thing they can't do to you is they can't hide from you. Because if markets are going up, there's more buyers. If markets are going down, there's more sellers. That's the bottom line of what pattern recognition is about. What you have to do is determine at what part of that pattern do you want to look at, as far as how much risk you want to take and what your profit potential happens to be. So keep that inclined, when you're looking at this level. Now, we did have a lot of resistance, as we mentioned, in the S&P in the previous show, up around the 1936 level, which came in, and so we're watching this really closely here this morning, and we'll see if we can talk a little bit more about it when we get back from the break. Post quick.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and this is Larry Pesavento setting in for the Blues Brothers. Actually, they're father and son. We shouldn't refer to them as that. That would be not fair. Anyway, we're going to take a look here at this E-mini S&P because we spent a lot of time doing it in the first half of the show, showing the relationships that we had. And you'll notice that we made a really nice Gartley pattern up there at that 1936 level. Fortunately, that was happening when we were on the air. I know a few people in the den that actually went in together and shared one contract, so it's working in the right direction anywhere. Now, the good thing that's about this chart, it's told us a lot of information here right after the first 45 minutes of trading. Even though we started basically unchanged, you'll notice that the deepening bar that happened just that closed about 15 minutes ago, that means a great deal, folks. That is a wide-ranging bar. And if you'll look at the same thing that occurred near the top, right after the top occurred when it was around 1940 yesterday, we had that same type of a long-range bar. The difference is this bar is longer. It's longer by about another 20%. So that tells us that we're probably going to break out the 1925 level. And should we do that, then we've set up an ABCD structure from the level at 1943 down to 1924, so that's 19 points. And then we rallied up to 1937, and you subtract 19 points from 1937, and that takes you down to the 1918 level, and that will be a 1.27 expansion of that BC swing, and it'll be very close to a 61% retracement of the low that we made back on the 19th of February when we were trading at 1898, and that would be our largest correction that we've had to date, because all of these corrections have been very minor, with the exception of this one that is possibly setting up. We don't know whether it's going to happen or not, but it's certainly set up to do that. Now, on the previous show that we were talking about crude oil, and what I wanted to do was to bring the crude oil chart up so that you'd be able to see it pretty easily here, because we were talking about the head and shoulders pattern that was there. And just give me a second here until I get it into the room, and you'll be able to see that head and shoulders pattern that we were looking at. And as you can see, we have had the bias to the downside. We're very close to that 32 level that we talked about on the previous show. That gives us an ABCD structure. It comes in exactly at 31.84, so we want to watch that level very closely. Now, anything below 31.50 would certainly tell us that this market wants to go down quite a bit, because the overall long-term trend is certainly down. We do have a lot of support at 28.80, which was a double bottom pretty much from this is April that we're looking at here. And so it gives us a pretty good idea of what we're looking. So this is going to be a real interesting day here in the crude oil to see if it's going to hold this level, and then we'll find out if it's going to be some support here or not. The main thing is the head and shoulders pattern, is working. It's down $1.70 a barrel from the high of the right shoulder. So the pattern is working, and that is one of the favorite patterns of Dr. Andrew Lowe, who wrote the book on the non-random walk down Wall Street that statistically validated all of these patterns. I did mine pragmatically. I had to prove it to myself that it was that it worked, and that was the main thing that I was trying to do. Remember the adage, folks, that the smart man learns from his mistakes, but the wise man learns from the mistakes of others. And if we just talk just a little bit here about another really smart dude from around 650 BC, Confucius, you'll see that he had a saying that I think really fits really nicely with pattern recognition, and it says, I hear and I forget, I see and I remember, I do and I understand. So doing is the key, because once you can do it yourself, then you've got something that no one can take away from you. And everyone that does pattern recognition and sticks with it will come to a moment in time, which I call the aha moment, or like Archimedes would say, eureka. You'll see it and the lights come on, and that's when it really changes for me. I struggled with this for many years, even when I was incredibly successful during my days at Drexel, when I was bullish gold and silver for 5 years when it's straight up, which pretty much was a no-brainer. But the main thing is that when I started to work with Bryce Gilmore, I only knew, the basics of Elliott wave and the Fibonacci numbers and stuff like that. I knew what 1.618 and 1.27 was, but I was not familiar with the square roots of these numbers, like 786 and 707 and the numbers of root 5. And when Bryce Gilmore told me these things, I mean, it was like I actually was trembling, because I had understood for the first time when I was watching these patterns form what they were really meaning. They don't work all the time, nothing does, but they work better than most things. And the thing is that they're predictive in nature, and so you can use them as part of your armamentarium, whether you're using oscillators that help you determine whether the volatility is turning or not, or moving averages. They help somewhat too, because they're used by so many people that you cannot disregard them, because it doesn't mean you have to use them, but you certainly don't have to discard them if you don't want to. But the pattern is what is the final thing that I really look at, and that is because it's the final point where you're going to be able to say whether you're right or not. And that's the D point in all of these patterns. The A, B, C, D, the Gartleys or the butterflies, they all have the same scenario that they're looking at. So we'll see. Someone asked me to tell you a story about how I met Bryce Gilmore. I met Bryce in 1987. No, it was 88. I published the book Astro Cycles, The Trader's Viewpoint. I was speaking in Chicago at the Palmer House, and there were a bunch of speakers there, and Bryce was there. One of my students came running up to me, and he said, "Hey, you got to come into this room." He said, "This guy is really good." And so he pulled me into the room. I walked into the back of the room, and there were about, probably 100 people in the room. And I didn't know who the guy was. I knew his name, and I knew his book. And sure enough, I walked into the back of the room, and he looked up and he saw me, and he said, "Well, there's Larry Pesavento." He said, "Why don't you come down here and sit in the front row, and you might learn something?" And everybody laughed. And so I went in and sat at the front row, and I swear to God, in the first 15 minutes, I was trembling, because I said, "Oh my God, this guy really knows it." Well, we went out to dinner several times during that weekend. He didn't even go back to Australia. We went back to Chicago, to California together. He stayed with me, I believe, a month that time, and then every year thereafter, up until 1994, he would come back and stay 6 months a year at the trading house. Jim Twentyman lived there on the second floor, and Bryce lived on the third floor, and on the ground floor was where the trading room was, which was fun. But that's how I met him. One smart dude. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. This is Larry Pesavento setting in for Tommy and Tom as they're in New York at the Traders Expo. The next chart that one of our listeners has asked us to talk about is the dollar-yen chart. And as you can see here, we had this monster move over the last 4 years. That was Tom O'Brien's call of the century, in my opinion, because he coined it King Dollar. And as you can see, we had this tremendous run. Now we've come down, and if you'll notice these red boxes that are there, the one in 2013 was a 38% retracement of the low from 2012. Then we went up and completed the ABCD structure up there at that 127. And now, over the past 9 months, we've been consolidating at a 50% retracement of that low from 2013. So there's a lot of support in that 111 area, and we touched the 111.80 again last night and then started to rally one more time. So this is very important. Not only that, but this is if you look at this on a really long-term basis, which is you're going back 8 years here, remember the old high in this yen trade used to be at 360. That was back when the Nikkei was trading at almost 40,000, at 39,000. It actually made its high on New Year's Eve of 1989. I happened to be in San Diego at that time, and I made a comment that I didn't think it was going to see 40,000 in the Nikkei. It got to 39,620 or something like that, and it was just a sophisticated wild guess is all it was. But the market, deteriorated from there and went down for 30 years. And, it was down 30 years. It certainly was. But anyway, that's quantitative easing didn't help them then, and I don't think it's going to help them now. I still don't understand it. I wish I did, but I don't. But that's neither here nor there. That's basically the bottom line of what we're watching here. Well, we've got the gold is up about $16 today. It's still holding this level of 1223. We need it to pop above the 1230 level per ounce. That'll give us a chance to break this triangle to the upside. And you remember, it's just a triangle, folks. It's not anything, in concrete. It's made out of paper mache. So sometimes they work, sometimes they don't. The other question that someone asked me during the break was about the crude oil, is how confident do I feel that, it would be a good buy in crude oil at that 31.80 level. All I can tell you is at that level, you're going to have an ABCD structure over the past several days. It's going to be coming in at an exact 78% retracement. So you have two of the things that we like to see the most in pattern recognition, and that is you have a price swing with a confirmation of an ABCD pattern. That's the definition of what a Gartley truly is. So whether it works or not, I don't know. All I know is that I'm buying at 31.86, and I'm going to risk my 80 pips, and maybe less if the market doesn't respond right away. But at that point, I know my risk would be 80 pips, and I can quantify that. I don't know whether it's going to work or not. Nobody else does either. Nobody can tell you what's going to happen next. The only person who can help to tell you what's going to happen next is God, and she doesn't trade. So that's the bottom line. You just got to, believe in what you're doing, and if you have it set up correctly, then you're going to be able to, be able to do it. You have to have a perception that your belief system is very, very strong. That's the one thing you really need to have if you're going to do trading. It's very, very important, and you have to build trust in what you're doing, because if you don't, you really don't have anything to hold back on. That's why if you watch golfers, when they're out there, you have to respect the game. I mean, it's not a physical game like football or baseball or basketball, but it's such a mental game. Well, it's physical, of course, but you have to hit 200,000 golf balls if you want to play around with Tiger Woods. But it's such a mental game because you're dealing in small increments and stuff like that. And that's the same thing we're doing with trading too. We're doing the same type of a thing that is working. You have to be able to mentally prepare yourself each day. So mentally prepare yourself for this crude oil trade, folks. Maybe it'll work, maybe it won't. Now, yesterday I was trying to prepare myself mentally to sell the S&P at 1942, and fortunately it happened to hit that level. I thought it was going to get up to possibly 1945 or 1946, but then again, I was just making an assumption. I didn't really know if that was going to be the case or not. So that's what we're keeping an eye on. The other thing that could be working for the crude oil trade is the fact that the Canadian dollar has had a pretty good rally over the previous day's range, and we've come back to the 78% retracement of that move. So that would give us some feeling, because there's such a strong correlation between the Canadian dollar and the crude oil that it makes it really difficult to not be able to look at one without the other. And Canadian's one of my favorite trading vehicles that I like to look at along with the yen. We've had questions about the British pound. We talked about this yesterday. We were down 250 points. We rallied 100 points, and then we came down again. If you remember, our good friend Jim Bartolioni sent us a great chart on the long-term pound going all the way back to 1985. And if you want to take a look at this, in the Tiger Den, you'll see that it has a great deal of support at this 139 level. The 1985 was the Plaza Accord, which was, I believe, February of 1985. And, so this is what we're looking at here. Now, they're saying whether they might exit the euro or not. I don't know. There's going to be so much shenanigans going on about that stuff. And believe me, we went through that stuff with the Greek thing, and don't buy it. Whatever they're telling you is, let the charts tell you what's going on, because you don't want to listen to what these politicians and financial pundits. I guess I'm one too, so don't listen to me either. Let's go on to something else. Anyway, that's what it looks like. The pound is we're heading down to the 139 level, which is only 150 pips from where we're trading right now. And we've made a same bottom as yesterday, but frankly, it doesn't look like that wants to hold, and we'll be heading down towards this stronger support level at the 139.30 level. So we'll watch that of looking at this thing. Remember the fears that Mark Douglas used to talk about, the fear of losing money, fear of leaving money on the table, fear of missing out, all those things. Those are very, very important. But the main thing is that the people worry about the most is the fear of being wrong. Folks, if you got a fear of being wrong, get another job, get a life, do something else, because you're going to be wrong a lot. And the difference between the professional and the neophyte trader is the professional tries to correct that error right away, whereas the neophyte trader will have second guesses. He doesn't have a belief system in his methodology that allows him to take losses and move on to the next trade. He doesn't understand the money management behind it, and that's what gives the problems arise from that level.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks. And when we started the show, we talked a little bit about the Treasury bond market because I believe I spoke about that on my other show, my regular show. I'm setting in for Tommy and Tom because they're in New York, as everyone probably knows by now. But we hit the exact 786 retracement this morning down there at that 164.28 level in the bonds. We've rallied well over one handle already. So this is a chart that is just showing you the minor support that we're looking at for today. That's the the bottom line, and that's what we're trying to do, is to find these support and resistance points with patterns. But what we need to do is we've got to be able to think from a longer time frame, I believe, in Treasury bonds, because I covered this in the newsletter this week very extensively, because we've completed a major butterfly pattern on the long-term weekly charts going back over the past year. That also, you could do this on the monthly and you would come up with the same type of a pattern. But that level that we made up there at that 171 level was certainly incredibly important. We broke 5 handles from that very quickly, and all we've been able to do so far is to make a very meager 40% retracement, and we're down on the day a little bit, but we're still way off the bottom because we did have a pretty good rally as stocks started to move. Part of the reason for the weakness, it appears that the London DAX index, which is the German S&P, basically the equivalent of the S&P, is under a great deal of pressure. As we know, the stocks of Volkswagen and Deutsche Bank have been under extreme pressure, and Deutsche Bank, I don't think it's gonna hold $8, but that's half of where it is from right now. So it's got a long way to go if it does go to the downside. So we want to keep an eye, on this, but we'll watch these interest rate markets to see if we are looking at something that could be, a lot more sinister than what we're looking at. Now, we had one other question from one of our listeners, and that is the chart of gasoline. And so far, the gasoline is held up. We talked about this on yesterday's show because we did make a Gartley pattern down there at that $94 level, and then we had a pretty good rally. And as long as we stay above that 94 level, we should have a pretty good chance of a rally coming in the crude oil market. So we'll see what's happening. They're down a little bit today in New York, so maybe this is going to pull that crude oil contract down to that 31.86 level that we talked about earlier in this show, but we'll watch it. Remember, when I give you these numbers, folks, sometimes they work, sometimes they don't. They work more than they fail, but you're the one that has to take the responsibility of how much risk and how much profit you're going to be looking at. All I'm trying to do is identify some of these patterns and stimulate a little bit of interest, in pattern recognition. When I started doing this stuff, 40 some years ago, we didn't even have these fancy computers. We got our charts by mail, by special delivery every Saturday, and we had to post them every day through the Wall Street Journal or through your brokerage firm, so this is why you have to take the responsibility to learn this yourself. This is it's a great business, but it's not easy. It's equivalent of about 4 or 5, college educations, in my opinion, but that's pretty much what we're looking at, and we'll see if that's going to be the case or not, but we'll wait and see. I think the most important thing that I received today was this chart from Larry Edelson, because I really respect his work, and if we look at this chart on gold, this is this neural network that he brought to our attention. I think if you get a chance, you should try to keep this pinned on your trading computer if you trade gold, because if this is correct, we're going to be looking at about 3 months of pretty steep correction here in the gold market, and it's showing that it could possibly go down to new low ground. Now, the one thing that I can tell you about my experience in neural networks, they're very good with time, but they're not necessarily that good with price, and that's because volatility will increase and decrease over periods of times, and these patterns will pick it up, but it's not as price sensitive as it is time sensitive, and time is the most elusive of all the things we look at. So you want to keep in mind that's what we're watching. We're going to keep this and we're going to watch it because it certainly looks like around the time that we have a real key date coming in, which is on March the 8th, that we have a real spot here in gold where it might be making a pretty significant turning point. Now, we don't know where prices will be at that time. Heck, they might be at $13.50. We don't know. But right now, it looks like that sometime in late March we turn down and then look out. So we want to watch this. This could be a really good move. We had a heck of a move on the upside based on just the patterns that we were looking at, and this just verified what we're looking at. And we're seeing the same thing now, that this pattern and this neural network is verifying the 61% retracement in the gold that came in at 1263. So that's the bottom line of what I'm seeing anyway. But we want to watch this very closely. The only question that I have is, why in the hell would he even show this? If I had it, I don't think I would. I guess he wants to get people to say he's very smart, or say Larry Edelson's very smart. But Martin Armstrong does the same thing, and so does Basil, and I do it a little, and so does Steve Rhodes. We like to share the information. Sometimes it works, sometimes it doesn't, but you pays your money and takes your choice, and let the chips fall where they may. Someone's asked me a question of whether I see the dollar index trading to 120 in the next 18 months. I certainly do, because I believe we're going to see the euro trading at 99, and since the euro is 53% of the dollar index chart, I can certainly see that. Remember, the euros had a tremendous range from when it started trading back in the 1999. It started at I believe 120, went down to 85. It went from 85 to 160. It went to 160 all the way back to 85 again, and then back up to 148, I believe. And that gives us the price objective that we're looking at down here at the next level. So we'll be watching that closely. But boy, it's sure got a lot of numbers saying that it wants to go to par based on the weekly chart. And we've all seen that weekly chart, in the euro several times. I usually bring it in every other week in the newsletter just to remind us that the longer term, picture in this, certainly, looks to the downside. One of the things that we talked about on Monday's show was the fact that we had such a downward bias in the euro. Just looking at it from February 16th, you can see that all of these patterns were scheduling to go a lot lower, and now we've broken down below the 1.618 expansion at 110.36. We're actually trading below there now. And so any rally that you get in this, and usually 70 pips is about all you're going to get when a market is this strong of a down move, is to watch that to see that if it's a 61% retracement or a 78% retracement of a previous high, that means you're selling into a very strong resistance. 877-927-6648.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Okay, we're back, folks. And this is Larry Pesavento setting in for Tom O'Brien and Tommy. And we had a call from Giuseppe Tuttofamaggi from Italy, and he asked about this number that we're seeing now in the crude oil coming in at 31.84 that we talked about. All I can tell you, Giuseppe, is that that is the number that is going to be etched in stone. Now, we do have a really strong move down from the 3360 level, so there's a possibility that that could break. So the best way to handle this would be to let it stay here for 5 or 10 or 15 minutes to make sure that the market is going to hold. You could keep it as long as a half hour. In fact, the safer trade would be maybe to wait till it hits the 31.84 level, and then we're trading at 31.89 to 31.90 now, and then gets the bounce. But if you buy it at 31.86, which is the buy order that I'm looking at, you don't have to risk very much there, about 30 pips. So you've got a contract that's worth roughly $32,000, and you're risking 1/10 of 1% on that, which is $300. That's about as easy as it gets, and it just got hit at 31.85. So the fat lady's singing at the opera, Giuseppe. So hang in there and see what happens. It'll either win or lose. That's the bottom line. And if that loses, just wait, and there'll be another one down there at around another $1 a barrel lower. Will be another ABCD pattern. In fact, if you have the cojones, I don't think they have cojones in Italy. They probably have something else. I know they have pecans and walnuts, but we'll see. Anyway, that's what it's looking like. It's just a pattern. It's just a ratio. That's all it is. It's just risk control. Whether it works or not, God only knows. And like I mentioned, she doesn't trade very much. So keep in mind that this is all based on pattern recognition. It has nothing to do with the fundamentals. So just remember that as you're doing your trading. It's now trading at 31.90, so you could take that $60 and buy yourself a couple of nice plates of pasta and some pizza and set out on the terrazza there in front of the Duomo there in Florence, Italy, and enjoy your meal. Wow, you've made $80. Now you're in big money. You could even add some mozzarella, fried mozzarella along with it. And I've been talking too much, and Tom's going to get rid of me if I don't shut up. So what we'll do here is we'll see what's going to happen with the market for the rest of the day here. Stocks are still weakening like we think they are going to. We got some support now. We're getting down to that ABCD structure down at 1919, which is our first objective coming in from the 1936 level. So we're very, very close to our first profit objective in this, and we'll watch it very, very closely. This is our first really big ABCD correction, folks, since our low at 1804. We haven't had one quite this big because we're down 40. We're down 26, 27. Yeah, this is the longest one that we've had so far. So we'll watch it very, very closely. So that's what we're watching here today, and we're going to be winding up the show here in just a few minutes. And it's amazing how quickly 2 hours can go. And it's been a pleasure, of course, being on. And I wish I were in New York because we enjoy going there. We have so many friends there. We really have. We used to go to the exchanges all the time, but we don't have that anymore. So we really can't get to do that anymore. But we used to have a lot of fun in the old World Trade Center too, up at the top of the restaurant up there. But those were the old days. Okay, so keep in mind that the gold's got to get above the 1232 area, some 1230, 1232 area to break that downtrend triangle or pennant level. And but it still has a bias to the downside. 877-927-6648. Setting in for Tom O'Brien and Tommy.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.